Okay, let's unpack this. Today, we're diving deep into Palantir. It's a company that always seems to spark intense discussion, sometimes even a little controversy. Right?
Absolutely. Always gets people talking.
So our mission for this deep dive is really to cut through all that noise. Let's try and understand what's actually going on with their stock, their business, and maybe what the future holds. Especially with this interesting idea of TARAP pre-resolution that keeps popping up.
Yeah, what's fascinating here, I think, is how the market's reacting. You've got these really strong fundamentals on one side,
Right.
and then the current stock movement on the other. We're looking at insights from a recent market analysis. This is called the Palantir Rebound Strategy Report.
Okay.
And it really focuses on this critical price point around 162
Right.
and how these different market rhythms are playing out. So hopefully you'll get a clearer picture of whether this is, just a temporary dip or maybe something more significant brewing.
Right. Okay. Before we get too deep into the stock chart stuff, let's just touch on why Palantir is so, hot in the first place. I mean, this report highlights some pretty incredible growth.
It really does. So for Q2 2025, Palantir's revenue actually broke the $1 billion mark.
Wow. Billion with a B.
Yep. And that's a 48% increase year over year. But here's where it gets really interesting, especially for you watching the diversification story.
Uh-huh.
Their commercial revenue, it exploded. 93% year-over-year growth.
93, that's huge.
It's massive. It signifies a huge expansion beyond just their traditional government contracts. They're proving they can win big in the private sector, too.
So they're not just a government contractor anymore.
Exactly. And they're also guiding for the full fiscal year 2025 revenue between $4.14 and $4.15 billion, plus expected EPS growth that's earnings per share of 57%.
57% EPS growth.
Yeah.
Okay, those are really robust numbers. Shows strong underlying health. So given those fundamentals, it's kind of puzzling why the stock isn't just, rocketing upwards. The report mentions the stock has, Sal J. Cattell slightly exited its swing support zone, and this TRAPE resolution term again.
Yeah.
What exactly is a trap here, and what does it mean for the price now?
Right. That's the key question, isn't it? Is this a real downward trend starting, or is it just like a momentary pause before the next leg up?
Uh-huh.
The report points to that 162 price range as the crucial point for this TRAPE resolution. Now, think of a trap as basically a period where the price dips below a key support level. It kind of traps investors who bought in higher.
Okay, I get it. Like they're stuck underwater for a bit.
Exactly. So the market's now trying to figure out if this short-term downward pressure can fade, if the stock can break free from that trap. The report uses this rhythm analysis.
Right.
And it suggests the market's in a short-term sort of consolidation phase, the deployment formation stage, they call it. But the slightly bigger picture, the swing rhythm, is still in a descending transition phase.
So still some downward pressure overall in that swing view.
Potentially, yeah. What we really need to watch for, according to this analysis, is for the stock to clearly get back into that swing support zone, specifically getting back above 162. That's the key signal that this TRAP might be resolving.
Got it. Okay, so every investment has risks and opportunities, right? Especially in tech. What are the key positives and negatives we should be aware of for Palantir right now, based on this report?
Sure. So on the plus side, you've got continued wins with big government and defense contracts, multi-$100 million deals. Then there's that surge in global commercial demand we talked about.
The 93% growth, yeah.
And a massive uptake of their AI enterprise platform. That's a big driver. Even potential political shifts, say a change in administration potentially leading to more defense spending. That could benefit Palantir too.
Okay, makes sense. And the downsides, or maybe the short-term worries.
Well, there are a few things to watch. The CEO recently sold about $60 million worth of shares.
That looks great, does it?
It always makes investors pause, yeah. Then there are the ongoing debates around AI surveillance, ethics. That stuff could eventually lead to tighter regulations, potentially impacting parts of their business.
Right, the regulatory risk.
And of course, just the general market environment. The Fed's interest rate policies definitely add to valuation volatility for growth stocks like this.
Okay, that's a really helpful overview of the landscape. So putting it all together, what does this report suggest in terms of strategy? If you're looking at Palantir, what's the approach?
Well, the report leans towards a swing observation strategy right now. Basically, wait and see.
Don't jump in just yet.
Not quite yet, according to this view. Wait for the stock to convincingly break back above 162 and re-enter that swing support zone before considering a purchase for a swing trade.
Okay. And for a longer-term view.
For a medium-term strategy, it actually suggests looking for an entry point around 120 for a longer hold, with a pretty ambitious target eventually hitting 285.
120 entry, 285 target. That's quite a range.
It is, and this ties into some technical analysis using Elliott wave theory. It suggests there's potential for a strong, like, three-wave rebound after this current two-wave correction finishes. Or if 162 is retaken decisively, maybe even a bigger five-wave extension pushing up towards that 200 to 285 range.
Interesting. Lots of technical signals to watch there. So the main takeaway then from this deep dive?
Yeah, the conclusion seems to be that this current dip, this exit from the swing support zone, the report frames it not as the fire going out, but more like a pause to catch its breath.
Catching its breath, potentially before a bigger rebound.
That's the idea. Could be setting up for something bigger if the conditions are right, especially if it reclaims that 162 level.
And connecting that to the bigger picture, it just underscores that even with really strong growth companies, these periods of uncertainty, these corrections, they're just part of the journey, right?
Exactly. They happen. The key for you, the listener, is to identify those critical signals like this 162 price point for Palantir that might indicate a turning point is coming.
So final thought then, what really stands out to you from all this? And maybe thinking broader. Could this whole concept of TRAP resolution be a useful way for you to look at other volatile stocks you might be holding or watching? You know, what other hidden TRPs might seemingly strong companies be navigating right now, and what signals should you be looking for to spot them early? Something to think about.